You have done the research, you understand the history of money, you know that central banks are buying gold, and you have decided to follow their lead. You are ready to trade your paper currency for real metal. So you walk into a coin shop, or you open a bullion website, and immediately you hit a wall. You see prices that don't match the news. You see hundreds of different coins: eagles, maples, buffaloes, Krugerrands. You see bars, rounds, and collectibles. And then a salesperson tries to sell you a rare coin that costs double the price of gold, promising you it has better growth potential. Stop. Buying precious metals is one of the smartest financial moves you can make. But how you buy them is a minefield. The industry is filled with sharks. It is filled with high premiums, hidden fees, and marketing traps designed to separate you from your money. If you buy the wrong thing, you could instantly lose 30% of your investment the moment you walk out the door. Welcome back to Crucible Markets. In the last 2 videos, we covered the why. Today, we cover the how. This is your tactical guide to buying gold and silver without getting ripped off. We are going to cover premiums, the difference between coins and bars, and the number 1 scam you need to avoid. First, we need to solve a math problem that confuses every new investor. You look at the news or a ticker on your phone and it says, gold is $2,000 an ounce. This is called the spot price. So you go to a dealer to buy 1 ounce and they ask for $2,100 or $2,150. You feel cheated. You think, why am I paying more than the price on the screen? Here's the reality. The spot price is a lie. The spot price is the price of a digital contract for 400-ounce bars traded between massive banks in London. It is the price of paper gold. It is not the price of the coin in your hand. When you buy physical metal, you must pay the spot price plus the premium. The premium covers the cost of mining, refining, minting the coin, shipping it, and the dealer's profit. Think of it like buying gasoline. The price of crude oil is one thing, but by the time it is refined and put in the pump at your local station, it costs more. Your goal as an investor is to keep that premium as low as possible. Every dollar you pay in premiums is a dollar you have to make back before you break even. If gold goes up 10%, but you paid a 15% premium, you are still losing money. Here's a rule of thumb for the current market. For gold, try to pay less than 5% over spot. For silver, premiums are higher. Try to stay under 15% or 20%. If a dealer tries to charge you 30, 40, or 50% over the spot price, walk away. That isn't investing. That is charity for the dealer. Now, the next big question. Should you buy coins or bars? This depends entirely on your budget and your strategy. Let's break it down. Bars generally have lower premiums. It is cheaper to manufacture 1 large 10-ounce bar than 10 small 1-ounce coins. If your goal is simply to get the most metal for your money, large bars are the answer. However, bars have a downside: liquidity. It is harder to sell a large bar. If you have a 1 kilo gold bar worth roughly $65,000, you can't just sell a little bit of it to buy groceries. You have to sell the whole thing, and fewer shops have that much cash on hand to buy it from you. Coins usually have higher premiums, but they offer liquidity and trust. Specifically, I'm talking about sovereign coins. These are coins minted by a government: the American Eagle, the Canadian Maple Leaf, the British Britannia. These coins are recognized instantly all over the world. If you take a Canadian Maple Leaf to a shop in Hong Kong, London, or Texas, they know exactly what it is. They trust the weight and purity because it is guaranteed by a government. They will buy it from you instantly. If you bring them a generic bar made by Joe's Refinery, they might want to drill into it or melt it down to test it. My advice for beginners: start with 1-ounce sovereign coins. Yes, you pay a slightly higher premium, but you're buying the ability to sell easily when the time comes. As your stack gets bigger, then move to larger bars to save money. Quick check-in with the community. Are you a stacker who likes bars, or a collector who likes beautiful coins? Type bars or coins in the comments. I'm curious which is more popular here. Now, we need to talk about the biggest trap in the industry. This is where millions of dollars are lost by innocent people. It is called the semi-numismatic, or collector upsell. Here is how it happens. You call a gold company, often one you saw advertised on TV. You tell them you want to buy gold bullion. The salesperson says, sure, we have bullion, but did you know the government might confiscate standard bullion like they did in 1933? They plant a seed of fear. Then they say, to be safe, you should buy these special proof coins or these historic European coins. They are collectibles, so they are exempt from confiscation. And look, they are selling for $3,000 an ounce instead of $2,000 because they are rare. This is almost always a lie. They are selling you a standard coin with a fancy finish, or an old coin that isn't actually rare, and they are charging you a massive markup. Sometimes they charge 50% or 100% over the value of the gold. If you buy that coin for $3,000 and the price of gold is $2,000, Gold has to go up by 50% just for you to break even. You are starting the race with a broken leg. Do not fall for the confiscation fear tactics. Do not fall for the rare coin pitch unless you are an expert historian. You are an investor. You want metal. Buy the boring stuff. Buy the standard coins. Buy the standard bars. If it looks fancy or comes in a velvet box with a certificate of authenticity, it is usually a bad deal for an investor. We need to talk about silver specifically because it has a unique problem. Physics. Gold is incredibly dense. You can hold $50,000 of gold in one hand. It fits in your pocket. It is easy to hide. It is easy to transport. Silver is much, much cheaper. The ratio is currently roughly 80 to 1. This means to hold the same $50,000 in silver, you need 80 times the weight. $50,000 of silver weighs roughly 60 pounds, 27 kilograms. It takes up a lot of space. It is heavy. You need a big safe. If you need to leave your house quickly in an emergency, you can grab your gold. You cannot easily grab your silver. However, silver has a superpower: divisibility. If we enter a scenario where the currency collapses, a true hyperinflation event, you cannot buy a loaf of bread with an ounce of gold. It is too valuable. It's like trying to buy a coffee with a $100 bill, but the shop has no change. Silver is the transactional metal. An ounce of silver is perfect for small purchases. This is why many preppers stack junk silver. Junk silver refers to US dimes, quarters, and half dollars minted before 1965. These coins are 90% silver. They are ugly, they are worn, but they are recognizable, fractional, and great for barter. If you are building a survival stack, get some junk silver. If you are building generational wealth, get gold. Finally, where should you buy? You have two main options: the local coin shop, LCS, or large online dealers. Local coin shops have a huge advantage: privacy. You walk in with cash, you walk out with metal, no shipping records, no digital paper trail. In many places, cash transactions under a certain limit are completely anonymous. Plus, you build a relationship. If you become a regular, the owner might call you when good deals come in. The downside? Their selection is smaller, and sometimes their premiums are higher because they have overhead costs like rent. Online dealers, like APMEX, JM Bullion, SD Bullion, have massive inventory. They have everything. Their pricing is transparent and competitive. The downside? You leave a digital footprint. You have to wait for shipping. And you have the risk, however small, of a package getting lost in the mail. My recommendation? Do both. Find a local shop you trust for cash purchases and privacy. Use online dealers for bulk purchases or specific items your local shop doesn't have. And always compare prices. Spend 5 minutes on your phone checking the online price before you agree to a price in the shop. Knowledge is leverage. Buying your first ounce of gold or silver is a rite of passage. When you hold it in your hand for the first time, something changes in your brain. You realize that the paper money in your wallet is just paper, and the metal in your hand is something eternal. You have now graduated. You know the myths, video 1. You know the central bank strategy, video 2. And now you know how to buy without getting scammed, video 3. But there's one missing piece of the puzzle. We have talked about protecting wealth. But what about Bitcoin? Is Bitcoin digital gold? Is it better than gold? Or is it a distraction? The battle between gold bugs and crypto bros is legendary. But here at Crucible Markets, we don't care about teams. We care about truth. In the next video, we are going to do an honest, brutal comparison of gold versus Bitcoin. No hype, no bias. Just the facts about which one will actually save you when the system breaks. If you want to survive the financial transition, make sure you are subscribed. And tell me in the comments, what was the very first piece of gold or silver you ever bought? I read every comment. Stay skeptical, stay prepared. And welcome to the Sound Money Club.